in these next 2 to 3 weeks, we're going to see more choppy, more volatility taking place. Now, as traders, that's fantastic. So let's go through some of the ideas in regards to how to manage yourself through the upcoming next couple of weeks. How do you react as a portfolio manager or investor? Okay, how would you sort of, trade and deploy, the tools that you have and the knowledge that you've developed when, in times of risk off, all of a sudden you see a panic sell-off where the Dow Jones is down nearly 900 points. What do you do? Well, the first thing I want to ask you to ask yourself is, did you buy shares with a short-term view in regards to the holding period? So that's what you've got to do, is have a look at the trade that I've taken, right? If I've taken a position, whatever it might be, am I holding this trade for the next, few days or a few hours? Then yeah, you might want to react, you might want to do something, right? But if I'm holding a trade that I'm looking to hold for maybe a couple of weeks, maybe even a few months, right? Or longer, why would I want to react based on that information, right? That's not what you want to do. Don't react, right? Don't panic, okay? It's Warren Buffett who says, in the markets, it's the impatient that tends to give their money to the most patient, okay? So be patient, relax, don't panic, and don't get feared at the market, okay? So that fear, there's two things that will happen in the markets. You're either going to be greedy or you're going to be fearful, and that fear is what we saw on Friday. Don't let that impact you. As I've already mentioned, the markets, I believe, had overreacted, and that's been confirmed when we saw yesterday a little bit of a correction occurring, okay? Markets decided to bid up those prices, okay? So the markets had over exaggerated, and that was largely due to that thin liquidity I spoke about with the US holiday, the Thanksgiving holiday on Thursday and Friday. Yeah, and also we know that it's going to take a few weeks for WHO, World Health Organization, to figure out the severity of this new strain. So I do expect for the next 2 to 3 weeks, as we come to the close of this month, well, today is the close of the month, and we're going into December tomorrow, and that's the final sort of month for the year. And we're seeing for the next 2 to 3 weeks, I don't think it's going to be a Santa rally. I really don't believe that we're going to see generally what we tend to see at the end of the year is a bit of optimism, Santa rally, sort of, closing equities and sort of highs. I don't believe that's going to happen in this case now. It's going to take a couple of weeks for us to learn more about this new strain, and therefore I expect volatility based on anything, right? Like I've just said earlier, we had the CEO of Moderna come out stating that this isn't. Let me just have a look. Where did I'm just trying a quick glance of what I just said. What was specifically said? Okay, so yeah, so even though yesterday we had a bit of a recovery, right? But that was short-lived, as mentioned already. As this morning markets seem to open, and it has proven that, right? It's open with more concern, more risk in the markets, and the market seems to be worried with this new Omicron sort of variant. And the reason being is that it could evade vaccines, as the CEO of Moderna predicts that existing vaccines will struggle against this new variant. Okay, so it's going to take that scientific community a couple of weeks to really establish key levels of evidence that they can provide us. But for now, what we do have is from yesterday. The reason why I was a little bit more optimistic is because, well, firstly, we did have just lost my train of thought. Biden, yeah, so US President Biden, who came out in a very positive manner, right? So, he gave a very optimistic view of what's taken place. Okay, so that's the first key point. Okay, so his view was that, okay, it's not a cause for panic. That's what he came out and defined as his key sentence from that speech. Okay, and they're making very little changes. Federal Reserve Chair Jerome Powell, who we spoke about a little bit earlier, again, he also mentioned that there might be they're going to look at this. There could be a slower recovery. With the US economy, the labor market, there could be continuation of this heightened sort of inflation scenario. But we're just going to monitor what's taking place. And he's due to speak today as well this afternoon at the Senate. So yeah, that's the sort of the key concern there. So now, what would you do? Yep. So what are the sort of the 3 key points that we could take away as a long-term investor or a portfolio manager adjusting and managing their own portfolio or Alpha Chain's portfolio? Well, the first thing is I would suggest rebalancing by taking some profits from overweighted shares and buying underweighted shares. Okay, so basically what you're trying to do is any assets that you've allocated a certain percentage to, if they are much greater than the percentage you've defined, you might want to bring them back into that percentage that you've initially outlined. And then any asset that you or shares that you've bought that is underweight, so it's less percentage than you had defined, and because it's losing, right? It's not moving in a positive direction. Those are the assets you might want to buy. So what you're trying to do is any asset that's made some profit, you're taking some of that profit and you're allocating to assets. It's into assets that have maybe overreacted or underweighted, or sold off more. So you're adding more. And bringing them in line with the correct portfolio percentages that you want to maintain. Now, by doing that, it's almost a value trade, right? So what you're doing is you're buying assets that are undervalued, right? And you're selling anything that's been overvalued. That's another way of seeing that. Okay, so that's one option that you have. The second is when Friday was also Black Friday, and it wasn't Black Friday buying goods and whatever you may have bought out there. It was Black Friday in the stock market as well. You could see that as markets have been discounted, right? So anything that was on your watch list that you had your eye on that you're looking to buy, you want to buy them at the lowest price possible. Maybe that was an opportunity to buy them in at that lower price. Okay, so that's so if you had a cash to spare and you were looking to buy a particular asset, you're just waiting for a better price, yet Friday would have been a better opportunity to buy that asset. And lastly, consider the diversification of your portfolio and how it fared in the panic. That's such an important point. Look at your portfolio and look at it the day before or a few days before or at the beginning of the week, and look at it at the end of the week. What was the percentage difference overall in the portfolio? Which assets did really well, which assets did really poorly? And really sort of work out, okay, how can I minimize if there is a large difference in the P&L from the beginning of the week compared to the end of the week. Yeah, and that's where you could maybe sort of look to, as you're aware of now, that this COVID and this new variant is not going away. We're only started to explore this. So therefore, I would look to allocate maybe a small percentage of my portfolio to maybe the healthcare sector, right, which showed outperformance on Friday's session. By having that, maybe that might minimize my overall P&L if we have another similar reaction as Friday. So that's another option that you have there. And so those 3 key points are pivotal for your development as a trader. Now, I'm just having a sort of quick look through the few questions. This is daily basis stock exchange price. Not sure what that's referring to, Mohammed, but we can touch on that a little bit later. So graphs we'll go through later. DCA, dollar cost averaging. Well, dollar cost averaging is very specific, right? Which means that you define a certain amount that you're looking to buy a particular asset on a given period, right? That's what that dollar cost averaging is. It doesn't take into consideration of what market conditions are and the environment we're in, right? So generally, if you say on the 1st of each month, I'm looking to buy $100 worth of Bitcoin, right? And then over the long term, the hope is that when prices are sometimes high, sometimes low, that you've averaged your price in, right? So you got to an average price, not just bought the prices at the high side. That's the idea there. So that's a strategy that every portfolio manager should have as part of their management of their portfolio, full stop.